Hey, good morning, guys. What's going on? I'm Dr. Boyce Watkins, and I thought that I would reach out to you guys as I happen to be on my way to a meeting with our financial planner. Believe it or not, the stock market has been an absolute free fall for the last several days. Actually, today it actually dropped by 800 points. I think the first day it dropped by 1,000. The day after that it dropped by almost another 1,000. And so the market's really plummeted. At this point, it's mainly the coronavirus that's driving most of this decline. It's all the stuff with the virus in terms of how it affects international supply chains. International travel is a lot tougher now, and it's not so much just what has actually happened with the virus. It is about the expectation of what they think is going to occur as a result of the virus, right? So everything's based on expectations. It's based on all the possibilities. Also, you got to factor in fear. There's a huge fear factor now. Right now, everyone's sort of been waiting for the other shoe to drop, and they've always been waiting for whatever the next scary thing was when it comes to the stock market. And now they finally found the thing to be afraid of, which is the coronavirus. Most experts are basically expecting that this year's corporate profits are not going to grow this year. Zero earnings growth is bad in terms of stock market prices. Now, the ownership of assets, the stocks definitely are cheaper now than they were a month ago, but they're not cheaper than they were a year ago, right? So if you thought stocks were expensive a year ago, then you could say, well, maybe they're still expensive now. I don't know. Everything's relative. Like if the market drops a lot, we feel like it's cheap, but really it may be cheap, because it dropped off an inflated high, right? So the values have gone way up and then they drop a little bit and we're like, oh, it's cheap, but really that same price would have been considered expensive a year or two earlier. So our stock's cheap right now. Cheap is a relative term. Cheap, if you assume that means that they cost less than what they're worth, then the answer is absolutely no. Right now, the stocks are worth exactly what they're supposed to be worth based on current economic conditions, current information, current expectations, etc. Now, in terms of the ownership of assets, is it easier to buy assets now than it was 2 weeks ago? Yeah. I mean, a lot of your favorite stocks are 10-20% off the mark from where they were 2 or 3 weeks ago. If there's some good news that comes out, like if they show that they can contain the virus, then yeah, you're going to see a surge in the stock market. But the problem is right now, I think, is that more and more surprise negative news keeps coming out. Trump did his press conference on the coronavirus to, do what a president's supposed to do, which is to calm fears and to, help people feel comfortable in terms of what's going on. He's not very good at that. The country doesn't have faith in Donald Trump, and also, he's funny with information. Like he doesn't believe. I think he said something negative or critical about the Centers for Disease Control, and that feeds into his whole idea that anybody who disagrees with him is giving out fake news. So he's not really the guy to really control and contain something like this, in my opinion. He even put, I think he put Mike Pence as the head of the committee designed to control the virus. So times like this are when you'd rather have a Barack Obama in office, because he's a smarter person, just generally speaking, smarter and more conscientious. His ego isn't as great, even though I think both of these guys have a couple of sociopathic tendencies. I'll talk about that more later. But Trump is a narcissist sociopath, whereas Obama is just a standard run-of-the-mill sociopath. But then again, I'm not qualified to even make that assessment. Alicia probably could do that. So anyway, with that said, I think the other issue is that there is the surprise negative news about the first patient that caught the coronavirus, and they could not track where it came from. So that means that person has a community infection. The community infection means that they're like, damn, they got it and we don't know what happened. We can't trace their steps. We don't know who they talked to. We don't know if they shook somebody's hand. Where did it come from? So that becomes a concern, because that speaks on the fact that the coronavirus could basically become like the cat that breaks out of the house and then runs around the neighborhood and you can't catch it anymore. So Be ready to rumble, be ready to fall. I think as the panic ensues and it sets in that the good times are over and that stocks are generally going to continue to decline, and people start to feel that way. Consumer confidence starts to drop. The recession sinks in, and I do believe the coronavirus can actually be the catalyst that drives us into recession. Then what you'll probably see is continued declines in the market. I mean, just being real with you. And I mentioned this to you guys in many cases. I've told you guys repeatedly. A big part of the reason I wanted you to be invested a long time ago is because the market was doing exceptionally good. Well, sometimes it does exceptionally bad, and sometimes it does bad for a prolonged period of time. But that does not mean that there's not value in owning assets. You're always better off, in my opinion, owning financial assets than you are in spending your money and giving it all away. Because if you own an asset and the price drops a little, then maybe you lose 10%, maybe you lose 20%. But if you spend your money, you're losing 100%. So can we at least agree? Give me a yes or no if we can at least agree that investing is usually better than spending. Can we agree that investing is better than spending? I hope that we can agree on that. Okay, so in terms of what I'm doing, I'll just share this with you guys. I'm still buying because I like owning assets. I want to own more and more shares of stock. I know that things like these are blips on the radar screen. 10 years from now, we'll probably look back and say, oh yeah, I remember that. Yeah, that was when when everybody was talking about that virus, and we had a couple bad weeks, right? Or we had a bad month, or maybe even a bad 6 months or whatever. But over the long haul, a bad month, 2 months, 3 months, 6 months, or whatever is nothing over a 10-20 year period. So here I am coughing.
I know, but you're perfectly healthy.
I'm coughing and sniffling. I'm getting on an airplane today too. Well, anyway, I'm out of here, guys. Have a good day, and if you want to learn more about stock market investing, feel free to get a 30-day free trial in my stock market investing class. I have a longer version and a shorter version. The longer version of my class, the membership class, is at theblackstockmarketprogram.com, THE, that's theblackstockmarketprogram.com. And then also the shorter version is drboycemasterclass.com. That's drboycemasterclass.com. It's a limited curriculum, but it's still good stuff. So either way, so feel free to go check it out. Have a good day. Those of you who live in Oakland, I'll see you in Oakland on Saturday. If you want to find out more about Oakland, you can go to drboyceseminars.com. That's drboyceseminars.com. And feel free to come on out. Hit the thumbs up button before you go. I'll see you guys soon. I'll keep you updated. Peace.